Hi, as many of you know, I'm Steve Podmore. I'm the founder of Transform Global. And this presentation, one of multiple presentations that we'll be uploading today, is really about the investment opportunity. Now, what we're going to talk about is a little bit of complex finance, the capitalization table that we envisage could be the route to raise all the capital that we're talking about, and I've mentioned in the other videos. What we're going to do initially, though, we're going to talk about the disclaimer. I'm going to read this disclaimer out. You can read it yourself. But it says, all values shown are based on a multifaceted set of assumptions. Now, while the founder, myself, while I believe that these values can be achievable, it's important to note that any investment carries an element of risk. Now, that said, the business plan includes flexibility and it's got multiple ways of risk mitigation or mitigating risk and aims to deliver acceptable investment returns. That's in the event that a cut back and smaller version of the vision is achievable. And these could include fewer and smaller rounds of equity raised and potentially not raising the SDG 360 Game Changer Fund itself. Impact investors should also take advice and consider if the potential impacts on the truly important issues warrant the risks which they may perceive, which could include a longer time frame, smaller financial returns than those illustrated in the target plan, which I'm going to show you in a moment, or indeed which in exceptional circumstance could include total loss of funds. Now, of course, the goal is to tackle these global goals in the fastest of way. And it does include an element of risk. Of course, it's also been a long time coming. However, what I believe is possible with the right people and with the right teams, we can achieve amazing things. But it's really important to note that point of caution. So without further ado, I'm going to get into the structure. So as you can see, we're raising £3 million in pre-seed investment right now. In the funding strategy document or funding strategy video, you can see what we'll be using these funds for. So I won't go into any detail of that right now. But that £3 million, what it will, and that's £3 million sterling, it's around about $4 million, that will deliver 15 million shares, 15% of the equity at this time. And that's a 17 million pre and 20 million post money value. Now, where is the other shares? That's 20 pence per share. What those investors will also receive is for every 10 shares they have in the bank, they will also have 9 shares allocated for them in the fund. 6 shares for every 10 they hold in the bank. So 15 million shares in the bank would give them 9 million shares or fund units in the fund. Now, what's also allocated is the friends and family support that I've had over a number of years working on this model. And therefore that friends and family support, it's about 10 million shares will be to the friends and family, and 5 million of those shares will go to introducers, both of the 3 million and the following 50 million that comes. In addition, they get fund units in the fund. Now then we have Transform Global Trust Foundation. It will receive 20 million shares. It will have the long-term governance, and it will use proceeds of those shares to deliver its impact mission around investment reform, around education, around health, and systemic activity to address climate issues and the SDGs. So the foundation will have A shares, full voting A shares. The friends and family and the seed will have C shares. They're non-voting, but with a seat at the table for the foundation. And myself, I will have B shares. They're voting, but they're designed to dilute to non-voting C shares over a 5 or 6 year period. And while that shows myself having 50 million shares, actually 40 of them will be reserved for myself and 10 of them would be reserved for other members of the initial founding management team over the first 6 months or so. Now, that is designed to incentivize the right parties, many whom we already know and who I'm already working with, but there will be others as well. So then the goal is to raise a further 50 million. And what it shows is that 50 million, 100 million shares, 50% of the equity, but that doesn't include dilution, which I'll talk about in a moment. So that's a 50 pre, 100 million post money, 50 pence a share. And of course, 60 million units in the fund as well, 6 for every 10 held. Now, what we also have to include is what we call the broad founding team. This is excluding the 10 million shares that are allocated initially out of my founder status shares. Now, those 100 million shares will be pro rata to the salary bill over the first 18 months. So all personnel will have an equal share according to their role, the time that they come in, the salary level that they have. So essentially, that's 90 million, and a further 10 million of those will be allocated in a discretionary basis to important hires that we bring on board. And then so that's roughly a third. You can see a further 60 million units. And then we also have a second tranche that is allocated. Now, those pro rata, again, those are on the first 50 months following the close of the fund. So when the fund closes for 50 months, so 4 years and 2 months, 100 million shares will be allocated equally, 2 million shares per month, pro rata to one's share of the salary bill. So if you have 1% of the salary bill, then you would have 1%, or if your salary represents 1% of the salary bill, you would have 1% of those 2 million shares for that given month. But of course, that enables many people to participate, from those who join initially right the way up till 5-6 years in. But these are restricted impact options. So that represents a quarter of the equity at that point, 60 million fund units in the fund as well. So as you can read here, those restricted impact options, they're tied to a minimum of 5 billion post-money value after what would be a successful mezzanine raise of £1 billion. So that would ensure the business is well funded and increasing the probability that all investors can make a healthy return on investment, and then further helping drive and achieve the significant impacts that are core to the vision. So you can see here that initial 3 million and 50 million, they of course dilute. And therefore that initial 3 million is now 3.75%. But as you can see here, it's shown to be worth 7.5 million. And there is the fund units as well. And the 50 million at that point is still showing it's worth 50 million, even though we have diluted it by a full 50%, or 100% actually. So you can see here that the investors who have put in that 50 million, they now have a quarter of the business that's got 400 million shares in issue. So that fully incentivizes the parties, but it enables us to get to the next stage. And the next stage is when we do the combined £300 million raise. So that combined £300 million raise is 100 million of equity into the bank and 200 million that is committed for when the fund is fully raised. Now that combined 100 million, of course, also comes with 60 million fund units, and the additional 200 million, when the 200 million is paid over on the successful raise of the fund, that will give those investors a further 300 million fund units in the fund for their 200 million pounds. So they at that point would be having 360 million fund units and 100 million shares in the bank. So you can see we're raising 100 million shares, 20% of the business. It's a 400 million pre, 500 post, and a £1 £10 per share value at that point. Now, we've talked about that. So then, when the fund is successfully raised, that fund, as we've talked about, is hardwired to invest £400 million into the bank itself. Now, that £400 million, it would represent, 200 million shares would be received for it, or given for it, a quarter of the business at that point, and therefore the pre-money value is 1.2 billion and the post is 1.6. That represents £2 a share. But as you can see here, the fund units also are not available at this point. It would be a circular thing, the fund having shares also in the fund. So we won't go to that level. But you can see now another allocation as well. And this is for acquisitions or performance options, what we call the second tranche, that would be D shares. And D shares, incidentally, are both non-voting and they don't come with any fund units. So those additional allocation for performance options is also to go alongside the currency, the 1.5 billion or so. If you take a look at the video that explains the transformed global investments, it will show out of the total 4 billion that we intend to raise, up to and including the IPO, about 1.5 billion of that is allocated as cash so that we can make investments into balance sheet investments into platform type activity, other investment banks and distribution and placement agencies and media and technology businesses. But so they're fully aligned, of course, we want to make sure that there is an element of currency, an element of stock in the compensation. On a similar basis, it will be restricted and conditional on both financial performance and impact. But that basically means a further 100 million for both the talent and the talent that comes through those acquisitions. So then we go to what we call the mezzanine or the C round. And as you can see here, $1 billion is the target, $1 billion for 200 million shares, 20% of the business, a 4 billion pre and a 5 billion post money value, and £5 per share. But in addition, if you remember back to the Transform Global Investments video, it shows how when we raise that billion, 400 million or so of it is allocated to be used for a partial exit for existing investors. So you can see here that the original 3 million, it will receive 7.5 million back at that time. The 50 million, it would receive 50 million back at that time. And you can see the rest that are there on the list. It means that people can be incentivized and properly given the opportunity. They don't have to take it, but the opportunity to have an initial or a partial exit. So then the goal is to raise 2.5 billion at IPO. Sorry, that billion in mezzanine, 400 million would be allocated to investments, 200 to additional working capital, and the 400 to the partial exit. So that also is designed to help us get investment ready for the IPO to raise, it shows here, raising 2.5 billion, a quarter of $1 billion of shares, which is 20% of the business at that time. So it would establish a 10 billion pre, a 12 billion post money value, or £10 per share. Now, on that basis, we believe a very conservative structure for the bank for Transform Global is to double its value. So what it shows here is the original 3 million could get 100 times return. We know that's pretty significant. But the 50 million can also get a 40 times return, thus turning 50 million into 2 billion. But in addition, you can see to the right, this is the target value for the fund. That's on the basis of raising 5 billion at IPO and doubling the value to 50 billion pounds in the total value of the fund. And if that's the case, then essentially that's £4 per share unit or per fund unit, and therefore that establishes that 50 billion value. So in addition to the 300 million that the investors for the pre-seed round would have, they would be sitting on shares in the fund at that point worth 36 million, and those who've put in the 50 million would have a further 240 million of shares in the fund. Now, what that shows, TG Transform Global Stakeholders would have 300 million shares. The investor that has put up the 200 million alongside 100 million, so that would be shown as the A round. So those A round investors, they would be sitting on shares in total that are worth 2 billion in the fund, in the bank, but they would also have those 300 million fund units, so about a further 1.2 billion of value in the fund. Now, of course, that's if we achieve the combined 75 billion in value that is shown here. So essentially what we're saying is a 300 million investment would be sitting on 3.2 billion pounds worth of shares, both in the bank and in the fund, if all those assumptions can be achieved. So thanks for watching. It's a short video that explains the investment strategy. Of course, there's a lot of questions that may stimulate, but I'm happy to answer them, both in my direct discussions with people who are qualified and relevant investors or stakeholders, but also on the platforms, my Clubhouse rooms, on LinkedIn, or directly. We're doing a number of Zoom meetings, and we're planning to really ramp that up and to make sure that we have appropriate investors and stakeholders and team for the 3 million, the 50 million, and thereon. So thanks again. I really appreciate you taking your time to watch this video and others in the series. And if you want to change the world, if this is important for you to do that and to do well, to do good and do well, feel free to get in touch. Thanks again.